Good morning, everyone, and welcome to the Weekend Volatility Box video. In this video, we're going to talk about all the Stock Volatility Box setups that triggered for Friday, April 24th, 2020. Before we talk about the setups, let's go over the rule set for our Stock Volatility Box fade setups first. So it's a really simple setup. We're looking for only two things. First, we want to see price action breach our Volatility Box clouds. And if that happens, then we'd like to see our edge signal confirmation on a 1-minute time frame. If those two conditions have been met, we can then use our volatility box levels to identify our entry, stop, and target. So the entry is at the volatility box clouds or better, the stop is outside of the volatility box clouds, and the target is at the gray target line. And I'll show you what this looks like in just a second, both in the Thinkorswim platform along with our Stock Volatility Box platform. But going back to Friday, we had a total of 63 trades that hit our live scanner tab where price action had breached these volatility box clouds. This is that first condition that we were just talking about. And so in this video, we'll go through each of these 63 trades and splice them up in different matrices based on the sectors, along with what actually triggered via our trade plan rules. We had 4 separate clusters of stocks that hit the live scanner almost in waves on Friday. And that was really easy to see thanks to the Volatility Box dashboard tool along with this live scanner. Right? And so those 4 clusters were oil, gas, and energy, which is denoted with blue, and so all of the stocks here are the ones that set up on the live scanner. We also had biotech and life sciences, which is purple. We had gold, which is gold, and then we had tech and consumer discretionary, which is yellow. And we've grouped the two of them together for some of these edge cases like Wayfair and Peloton, in which they were still interesting setups and they kind of fell borderline between tech and consumer discretionary, so they're grouped together as yellow. We'll study these 4 clusters and specifically compare how many total trades set up on the live scanner, which is everything on this table right here, compared to the ones that hit all of our volatility box rules, which we talked about right here. Right? And so we'll do that comparison to try and find what the probabilities look like between the two, and if applying our rule set helped us improve our probabilities, or if they did more damage than help. Now, these volatility box levels can be plotted 2 different ways. One is you can use the Thinkorswim indicator files using the indicator generator tab, which is right here on the Stock Volatility Box platform, where you can generate as many of these indicator files as you'd like. And so this is an example of Peloton. Another example, which is web-based and built into our platform, is using the dashboard, which gives you those same levels, but much, much quicker. Right? You can use the dashboard to run up to 30 symbols at any given time and get the levels just like that almost instantly, which gives you your long entry, your long stop, and your long target, along with the same on your short side. And so those are the 2 different ways that you can plot these levels once they appear on the triggers page, which is our live scanner. So now if we take a look at those 4 clusters and we look at the total number of trades versus the ones that actually triggered according to our setups, we'll start with oil, gas, and energy. And let's also talk about how to break apart this table. So you'll notice that there's a few different columns here. Our first column is the cluster that we were looking at. The second column is the total number of trades that hit the live scanner. The third column is out of those total number of trades, which were the ones that actually hit our volatility box rule. So for example, out of all the trades, 21 in total, only 3 of them actually hit all of our rule sets and gave you an opportunity to take that trade, enter real time, and take advantage of either the win or the loss. Now the winning percentage in this next column is for the total amount of trades. So this is if you applied no rules. And the next column is what the winning percentage looked like with our rule set. And finally, in the last column, you can see a list of all the symbols that actually triggered for all of our Stock Volatility Box members if you'd like to do a deeper dive and take a look at some of these triggering real time. Now, we'll just go straight across. Using oil, gas, and energy, we had a total of 21 trades that hit the live scanner, but out of those 21, only 3 of them actually triggered using our rule set. Now, if you had followed just to 21, the winning percentage with no rule set was 52%, but when we applied our rule set, we were able to bump that up to our 3 setups to a total of 100%, and the 3 symbols that we had were UCO, CZZ, and SCO. Now, if we apply the same thing, but now we'll go down the line to biotech and life sciences, there we had a total of 10 trades that set up on our live scanner. 6 of those 10 actually triggered and gave you an opportunity to enter real time, and we were able to bump that winning percentage up with our rule set from 40% to 50% for still overall net positive P&L. These are the symbols that set up for biotech and life sciences, again, if you'd like to dive deeper. Now, gold was really interesting for a few different reasons. Gold, we had 3 total setups on our live scanner, and they happened almost back to back to back. They were JNUG, NUGT, and then dust. And all three of those set up at the same time, in which we also had our futures volatility box giving us a setup in gold for an opportunity to get long. So I thought that was really interesting to see how our daily stock volatility box levels worked with the futures volatility box levels on the hourly basis to give us what you may consider an ultimate setup in which you have the hourly and the daily levels overlapping. So in gold, we had 3 trades that set up via the live scanner, and all 3 of those were winners, and out of those 3, 2 of them hit our rule set, and so you had opportunities to participate in 2 of those 3 for an overall winning percentage here in gold of 100%. So gold was the best to trade, rule set or no rule set. Oil, gas, and energy so far have been the best ones that once we applied your rule set, you had the biggest bump, but so far the rule set has benefited. Right now you're about to see an example in which our rule set actually did more damage. So with tech and consumer discretionary, we had a total of 8 trades, and out of those 8, 6 of those actually triggered via our rule set. Now keep in mind, most of these 8 trades took place towards the latter half of the day, and the way to tell that is by looking at the table. So if we go back to that main page, this is in chronological order based on setup time. So you can take a look to see that we had a good chunk of the tech trades appear in the latter half of the day versus our oil, gas, and energy stocks, all of which set up in the morning, and then our gold stocks were right there in the middle, all happening at the same time. So going back to the table now, we'll finish off with our tech and consumer discretionary. We had a winning percentage with the live scanner of only 37.5%, and applying our rule set here, that got reduced down to 33%. Again, end of day on a Friday, so take that with a grain of salt, but these numbers don't lie in the sense of if you compared the 4 clusters, tech and consumer discretionary were the least performing compared to oil, gas, and energy, and gold using our rule set, and biotech and life sciences was a coin flip. Now, if we find a few different takeaways from this presentation and everything that I think our rule set has tried to teach us, the first one is applying that rule set for the most part increases our probabilities. We've seen that to be true with futures and stocks, and I hope that, at least using numbers, we were able to prove that this time and seeing the bump up in terms of overall percentages and what that increases by. The next is something that I think we've known for a while, but it's that idea that trade probabilities decrease as we approach into Friday afternoons. I'm sure you've heard that saying that Fridays kill accounts, but this helps us to see that live in action, at least with the tech and consumer discretionary trades. Now, of course, there could be a myriad of reasons, but we'll use Friday afternoons as one of the things, the cautionary points, where you may want to stop your trading well ahead of that period to try and avoid trades where you may have funky probabilities. Now, the biggest thing that I'm hoping you've taken away from this is just how easy it is to identify the clusters when the markets are moving and which markets are moving, right? Especially with things like oil and gas and energy. It was really easy to find that, hey, there were a lot of stocks moving in this sector today and a lot of stocks hitting our edge. And now we can apply our rule set to find the places where we can trade at the edge with an edge, applying our rule set, increasing our probabilities, increasing our confidence in the trade, and using our process-driven 2-step approach to take that trade in a consistent manner every single time and to consistently pull out profits from the marketplace. And finally, I think the last point that we have is the live scanner in the platform does much of the heavy lifting for us, but it's our job to continue to maintain our emotions, to continue to go and look for that second signal, and to then take these trades as they set up and make sense of some of these patterns that are appearing, right? Things like the gold pattern. So I'll conclude by showing you that same table, but instead of what we had the first time, we'll take a look to see everything highlighted is all that's triggered, right? So out of our 63 trades, we can see that this is all of the trades that triggered in our 4 clusters that we were looking at, and that's a dramatically smaller list, a place where we can now go and focus and take the places where we have trades where we can start to win consistently and take profits from the marketplace. Hope that video helps, and we'll see you in the next update.